Across the country, dealership lots are jammed. Harleys, Hondas, and gold wings that once moved fast now sit in rows, silent under the lights. The latest auction data shows used prices down 22% in a single quarter, and more than 2 million motorcycles just dumped into the US market. That's not rumor. That's inventory overflow straight from dealer sheets. Floor plan loans are bleeding dealers dry, and resale values are falling week by week. In this video, we'll pull the numbers, show who kept the assembly lines running, and explain why this collapse is bigger than anyone wants to admit, and how riders can use it to their advantage. The floodgate opens. Walk past any dealer lot right now, and you can smell it. Dust, fuel, and quiet panic. Rows of motorcycles sit shoulder to shoulder, polished but motionless under the sun. What used to sound like summer, the low growl of engines and the chatter of test rides, has turned into silence thick enough to hear the wind cut through chrome. Every corner of the country feels it. From the industrial outskirts of Milwaukee to small-town lots in Tennessee, something's gone wrong. Nearly 2 million gasoline motorcycles have flooded the market in a single quarter. Not over years, not through slow resale cycles, but in one concentrated burst that hit like a freight train. Across the Midwest, warehouses are now packed floor to ceiling. Forklifts shuffle bikes between storage yards like boxes of unsold appliances. Machines that once represented freedom and fortune now sit tagged, discounted, and waiting for bids that never come. The overflow has spilled into every channel. Dealer trade-ins, private classifieds, auction houses, even online resellers scrambling to move metal before values slide further. A touring rig once worth $20,000 now sells for half. The shock isn't just financial, it's disbelief. Gasoline bikes, especially big American cruisers, were supposed to be immune, aging with pride, not panic. That myth shattered overnight. The correction is real, visible, and brutal. Across garages and dealerships, one question echoes louder than exhaust. How did everything collapse this fast? And what broke first? The answer starts where the pain hits first. The dealerships trying to stay alive while the flood keeps rising. Dealers under siege. Step into a small-town showroom today and the tension hides behind forced smiles. Salesmen straighten handlebars and wipe the same spotless tanks again and again, pretending it's business as usual. But behind those smiles, the math is brutal. Every unsold motorcycle costs money every single day. Dealers don't own the inventory outright. They finance it through what the industry calls a floor plan, a ticking loan that charges interest the longer the bike sits. When the market slows, that interest bleeds them dry. One dealer in Kansas described it like watching sand pour through an hourglass he couldn't flip. Bikes worth $15,000 wholesale are costing him dollars in interest every day they sit, multiplied by dozens of units. Multiply that across months, and it becomes a slow-motion collapse. Many of these dealerships are family businesses that survived recessions, fuel crises, even the dark years of declining ridership. But this time feels different. The volume is too high, the buyer's too hesitant, and the factory trucks just keep rolling in. Inventory ages faster than it sells. After 90 days, each bike bleeds money. By 120, it's toxic. Dealers hide overflow in rented storage, praying for spring. Some slash prices, others take losses just to breathe before interest bills hit. The polished smiles can't hide the cracks, and even loyal customers see the strain. The question echoes through every office. Who keeps shipping bikes nobody's buying? To find that answer, you have to go deeper, past the dealerships into the factories that never stopped humming even when the orders did. If you've ever seen a dealer lot packed with bikes they can't sell, hit that like button. Drop a comment with what prices look like near you, because this market's changing fast and every rider's story matters. Factory autopilot. Inside the plants, the air still smells of oil and metal, and the machines never stopped. Even as reports came in from the field about cooling demand, the assembly lines stayed lit. For many factories, shutting down wasn't an option. Long-term supplier contracts demanded minimum production quotas, and the penalties for missing them ran into the millions. Management faced a grim calculation. It was cheaper to keep building motorcycles nobody ordered than to stop the lines and trigger breach fees. Politics made it worse. No executive wanted to announce layoffs right before an election cycle. Closing a plant, even temporarily, makes headlines. Keeping the lights on meant good optics, steady jobs, patriotic sound bites, and shareholder calm. Out on the floor, workers kept clocking in, welding frames, and crating bikes that had no buyers waiting. Some knew it made no sense. One supervisor in Wisconsin put it bluntly, "We're stacking chrome like firewood and pretending it's prosperity." Executives called it seasonal adjustment, insisting production stay on pace to protect quarterly promises. Missing targets risked tumbling stocks, so assembly lines kept humming while optimism outran arithmetic. By year's end, yards overflowed with millions in unsold steel, factories quietly cutting to weekend shifts. It wasn't strategy, it was denial wearing a smile. That blind momentum, refusing to break, became the shove that toppled the first domino. Once production outpaced reality, the signs of collapse began to appear where everyone could see them. In the classifieds, the auctions, and the price tags that started to crumble. Before we go deeper, check the description for the gear and accessories real riders trust, built to last, even when the market doesn't. The first cracks, the first visible fractures showed up online. Classified listings multiplied overnight. Search results that once displayed a handful of clean examples suddenly showed hundreds, all within driving distance. A bike posted for $14,000 dropped to 12 in a week, then to 10, and still sat unsold. Private owners panicked when they saw dealers undercutting them. Riders who once bragged about holding value began watching depreciation eat their pride and joy before their eyes. Auctioneers called it a 5-year supply compressed into 1 quarter. Across the Midwest, drone footage from storage lots revealed rows of tarped motorcycles stretching like freight trains, a silent inventory waiting for bidders that never came. What had begun as whispers of a correction had turned into a flood of proof. You could measure the collapse in every sales report and feel it in every dealership conversation. The shock cuts deeper than numbers. Once symbols of freedom and craftsmanship, big bikes now sit like unwanted furniture. Riders who paid $20,000 see the same machines listed for half. Pride erodes with every markdown, and even those not selling feel the sting. Resale value mirrors identity, and that reflection's cracking. Behind the listings and spreadsheets lies a harsher truth. This isn't ending soon. It's only beginning. The market's machinery, the data, the auctions, and the hidden math is where the real collapse begins to take shape. The price ledger turns red. The numbers came quietly at first. A few dealers whispered about soft prices, but nobody wanted to say the word crash. Then the data sheets landed. Median resale values for gasoline motorcycles fell by more than 20% within a single quarter. Auction averages slipped below thresholds not seen since 2009. Models that used to sell in 10 days now lingered for 60, sometimes 90. The gap between the price a seller wanted and what a buyer was willing to pay widened like a cracked frame under stress. In the used market, patience used to be an asset. Hold your price, wait for the right rider, and eventually someone would pay for quality. That logic is gone. The moment a listing goes live, buyers scroll past anything priced above the new reality. The algorithms that power online marketplaces have learned to punish stubborn sellers. The longer a bike sits, the lower it ranks, pushing desperate owners to drop prices even faster. What was once an art, valuing a machine based on condition and history, has become pure math, cold and automated. Analysts agree a touring bike worth $16,000 last summer now sells for $9,000. Mid-range cruisers have lost a third of their value, and even once bulletproof Japanese models slide in sympathy. No brand is safe, only falling faster. Buyers panic too, afraid to catch a collapsing price. Each hesitation deepens the stall. Confidence has snapped, And for the motorcycle market, this is the moment the engine finally coughs out. And just like any chain under pressure, the collapse didn't hit all links at once. It snapped in sequence, one category after another. The domino fall. When the first numbers hit, it wasn't the big machines that suffered. It started small. Commuter bikes, standards, and light cruisers, the workhorses bought by first-timers and budget riders. Once fuel prices steadied, the urgency to buy cheap transportation faded. Rows of 500 to 700 cubic centimeter models began stacking up in backlots. Dealers who once bragged about flipping entry bikes in days were suddenly holding them for months. Next came the weekend cruisers, the 800 to 1100 class, often financed as toys rather than transport. Insurance premiums and rising loan rates turned those luxuries into liabilities. Many owners decided one bike was enough. The used listings for these models exploded, most showing barely 5,000 miles and notes like "just don't ride anymore." Sentimental value couldn't survive financial math. The heavyweights fell next. Touring rigs and baggers, once seen as recession-proof, now sat like relics. Retirees delayed upgrades, collectors unloaded garages, and even European imports lost their shine. A $15,000 BMW no longer beat a $10,000 Japanese tourer. Pride turned to bargaining as Harley, Honda, and Triumph all fought for the same wary buyers. Identity collapsed, hierarchies flattened, and every badge bowed to the same law of oversupply. But the deeper shift wasn't just economic, it was cultural. Riders themselves began to change the rules of what mattered, vanity to value. For decades, motorcycles carried a silent code: pay for the badge, and the badge will take care of you. A Harley or BMW on the tank once meant guaranteed resale, respect, and the right kind of attention at every gas stop. That code just broke. In forums and classifieds across the country, riders brag about how cheap they scored deals, not about brand loyalty. Picked up a clean shadow for half the price of a used Road King, one post reads, followed by hundreds of likes and nods of approval. Pride has pivoted from prestige to practicality. The conversation has moved from "look what I ride" to "look what I saved." Function per dollar now outweighs legacy per letter. Riders who used to chase status now chase stability, parts availability, fuel range, seat comfort, and simplicity. Even longtime brand loyalists are buying what works, not what shines. Markets evolve when myths die. The emotional premium that once crowned brands is gone, a century of prestige undone in one bad quarter. Riders now judge machines by miles, not emblems. Arithmetic beats advertising, truth outruns hype. As spreadsheets spread, loyalty shifts. The hierarchy collapses into a democracy of practicality, where value replaces vanity and performance, not pride, decides who still earns a place on the open road. But while riders debate online, the real decisions are being made somewhere quieter, in the auction halls where dealers fight for the next round of survival. The gravity of auctions. If the public marketplace is the surface, the dealer-only auctions are the bedrock beneath it. The true gravity that pulls every price down to earth. Every Friday morning, in warehouses from Ohio to Nevada, hundreds of gasoline motorcycles roll across lanes under fluorescent light. The air smells like rubber dust and tension. Dealers bid with clipped gestures, eyes locked on screens showing mileage and VIN history. Last year, a clean late-model touring Harley might have fetched $12,000 wholesale. Today, the same bike struggles to clear $8,000. The new low becomes the anchor for retail, whether dealers like it or not. Within a week, the floor shifts again as more stock arrives from repossessions, trade-ins, and unsold carryovers. This invisible marketplace decides every figure that later appears on public listings. Retail prices can't outrun the auctions. Once enough bikes sell cheap, the national average resets. Salesmen know it. Buyers do too. One screenshot from a wholesale sheet can kill a deal. Auctions are silent gravity. Every bid drags the market lower. No villains, just math on concrete. The clang of kickstands in those warehouses sets next month's prices before riders realize the tide has already turned. Those echoing lanes would soon decide more than prices. They'd define who survives the storm. Dealers on the edge. Step behind the bright lights of any dealership, and you'll find the tension hiding in plain sight. The break room smells like stale coffee and paperwork. Salesmen keep their smiles up front, but the talk in the back is all about numbers that no longer add up. Every day, unsold motorcycles rack up interest, small amounts that grow into bleeding wounds on the books. It's not dramatic, just relentless. A bike that cost $15,000 wholesale quietly drains a few dollars a day, multiplied by dozens of units. That trickle of red ink doesn't stop when the doors close at night. Owners are juggling everything they can, refinancing loans, delaying paychecks, trimming advertising, and praying for a summer rush that might never come. In small towns, where dealerships double as local gathering spots, the pressure feels personal. These aren't faceless corporations. They're family-run outfits that have been selling machines for generations. When sales dip, it's not just numbers falling. It's legacies slipping through oil-stained fingers. Dealers whisper about selling property to survive, cutting staff with quiet apologies. They sell freedom yet live chained to debt, their showrooms glowing while for sale signs pile up out back. Each week of soft demand tightens the noose. They've weathered recessions, but never a flood like this. Every closure erases more than jobs. It steals identity, pride, and belonging. And still, the pain doesn't stop at the showroom doors. Beyond those showroom walls, the next wave of pain was clocking in, one shift at a time. The line workers lament. Inside the plants, the rhythm has changed. Where the clang of wrenches and the hiss of welding once filled the air, long stretches of quiet now separate the noise. Overtime, once a given for anyone who wanted it, has all but vanished. Crews that used to run 3 shifts are down to 1. Managers call it schedule optimization, but everyone knows what it means. Hours cut, paychecks lighter, and futures uncertain. These are men and women who built motorcycles for decades. Their pride shows in every frame welded straight, every crankshaft torqued by feel. They didn't get rich doing it, but they earned respect, the kind that comes from making something that lasts. Now they stand beside idle machines, staring at production boards that haven't changed in weeks. Some have started using vacation time just to cover the lost income from shorter shifts. Others take side work fixing cars or mowing lots just to stay afloat. Union halls buzz again, coffee flowing as veterans debate hours and severance. They've weathered the 70s, 90s, and 2000s, but this collapse feels different. Too many bikes, not enough accountability. Decisions made far away cut deepest close to home. Paychecks shrink, diners empty, glove orders stop, and towns built on engine hums fall silent. The pain doesn't end on the factory floor. It echoes upward, straight into the boardrooms. The echoes of the factory floor didn't stop with the workers. They reached all the way to the executive suites. If you still believe riders deserve the truth before the headlines, hit subscribe. We break stories no dealership will mention, built for riders, not shareholders. Stay sharp, stay loud, and let's ride through this storm together. Boardroom panic. In corporate towers far from the grease and grit, panic has a polished face. The quarterly calls start with calm voices and tidy language. Executives say things like strategic recalibration and temporary correction, but everyone listening knows what that really means: falling profits and eroding confidence. Earnings reports show softer guidance, dealer networks shrinking, and inventory costs rising. It's the kind of language Wall Street calls cautious, but dealers call trouble. Behind the scenes, financial departments scramble. Credit terms once stretched to 6 months are suddenly down to 90 days. Floor plan lenders, nervous about defaults, start demanding faster repayments. That pressure rolls downhill. Dealers can't hold bikes as long, so they discount faster. Factories see the numbers and cut production harder. It's a feedback loop no one can stop. Boardrooms that once roared with confidence now whisper confessions. Budgets are gutted, updates frozen, investors nervously rename heritage cyclical risk. Pride has turned fragile under spreadsheets and stock slides. The culture that built these machines is now a liability to those selling the dream. When profit no longer values passion, everything sacred becomes expendable. And as always, when markets shake, politicians rush to the microphone to promise nothing. As the financial fog thickened, the noise of politics crept in to claim its share of the blame. Policy whiplash. Once the headlines hit, politics followed. Cameras rolled in front of shuttered dealerships as candidates promised to protect American manufacturing and support our riders. But behind the speeches, the solutions collided with reality. Tariffs, import codes, and trade loopholes tangled into a mess only bureaucrats could love. At the center of it all sat a small string of letters and numbers, the VIN origin code. Those tiny digits decided whether a motorcycle was built in Wisconsin, Thailand, or Brazil, and that alone could swing its price by thousands. Two identical bikes, same model and same year, could cost wildly different amounts depending on where the frame was stamped. Domestic units avoided certain tariffs. Imports got slapped with new ones. Dealers hated it. Buyers were confused. Politicians called it fairness. Trade lobbies scrambled as rules shifted daily, forcing manufacturers to reroute shipments and rewrite prices overnight. Buyers got trapped between policy and politics, where checkout totals changed like headlines. Overseas suppliers froze, shipping firms stalled, and every delay bled into higher costs. Politicians promised support but delivered confusion, leaving real riders, the ones who wrench and ride, paying for a crisis they never caused. Everyone argues, riders endure. While governments argued and lobbies scrambled, riders were left with one question that mattered more than any headline. Riders' Advantage Playbook. When the dust starts to settle, opportunity hides in the noise. Markets collapse fast, but they never stay that way forever. The veteran riders, the ones who've seen cycles rise and fall since the 70s, know that chaos is just another word for leverage. When dealers are desperate, the smart buyer moves quiet and patient. Understanding timing is everything. Every dealership runs on a calendar of pressure, loan deadlines, floor plan audits, quarterly targets. You can almost hear it if you listen closely. The nervous sales tone that shows up around the 15th of each month, or the sudden markdowns at the end of a quarter. That's when you buy, when the salesman's sweating, not smiling. VIN decoding is the new survival skill. Those 17 digits reveal origin, parts, and tariff fate, a 5-minute check that saves thousands. Knowledge beats luck every time. As autumn clears showrooms, patient cash buyers strike where impulse fails. Emotion costs, restraint pays. The rider who can walk away controls the deal. In downturns, the smart don't outspend, they outweight, cutting smarter while factories bleed losses. Far from Wall Street and factory floors, the survival instinct of real riders was rewriting its own rulebook. Factory retrenchment. Inside corporate offices, the energy has shifted. Not long ago, the talk was all about growth. New models, global reach, diversification. Now it's about containment. Engineers whisper about shelved projects. Design teams that once sketched radical prototypes now work on stripped-down updates, meant to use existing tooling instead of new molds. They call it efficiency. The workers call it survival. Model lines are being quietly simplified. Instead of 10 touring variants, a company might offer 5. The same platform gets repainted, rebadged, and reintroduced as limited. It's not innovation, it's resource management. Each cut trims cost and risk, even if it dulls excitement. Invisible price shifts hide in plain sight. Stickers stay steady, but cheaper parts, thinner chrome, and lighter metal tell another story. Executives call it value engineering. Riders call it less for more. High-cost plants stall while offshore lines surge. Tariffs deciding who survives. It's not innovation, but triage. Survival over pride. In that silence, truth returns. Loyalty rides on durability, not marketing. The rest fade into nostalgia's archives. Those changes inside the corporate walls sent tremors well beyond the borders of the United States. Global reverberation. What began in American dealerships is now echoing through Europe and Asia. The same oversupply that flooded local lots is spilling into export markets. Containers once filled with high-margin bikes bound for foreign showrooms are now rerouted, discounted, or held at port. Countries that depended on steady American demand are scrambling to adjust their forecasts. In Europe, distributors are trimming imports and leaning on used inventory instead. The euro's fluctuation against the dollar has turned what used to be predictable shipments into financial guesswork. Some markets are seeing 2-year-old bikes advertised as new simply because they've sat unsold since before the crash. Even the luxury brands, Ducati, Triumph, BMW, are rethinking what premium really means when middle-class buyers are walking away from €12,000 machines in favor of €6,000 survivors. Across Asia, factories once exporting are now drowning in return stock, with local riders buying American spec bikes at record lows. Shipping routes run half-empty, storage yards packed from Thailand to Germany. Yet amid the slowdown, smaller builders in India and Eastern Europe rise, lean, fast, and fearless. The old giants bleed, but the craft revives in their shadow. From collapse comes renewal, and from steel, something stronger returns. From the noise of collapsing exports came the faint rumble of something older, a revival waiting for its spark. Cultural rebirth. Walk into any garage at dawn, and you'll see it. The quiet ritual of a man checking his oil, adjusting a chain, tightening bolts. No rush, no audience, just the rhythm of care. After years of chasing performance charts and payment plans, riders are returning to something simpler: ownership as craft. The crash stripped away the illusion that prestige was progress. What's left is function. Reliability is the new badge of honor. Riders take pride not in luxury seats or touchscreen dashboards, but in engines that fire on the first turn. They talk about miles, not models. Stories replace specs. The culture feels older, but also purer. Shops that once sold chrome now teach repair. Forums trade tutorials, not arguments. Younger riders learn carburetors from veterans who built them decades ago. The line between hobbyist and mechanic fades, replaced by grit over gloss. In that rediscovery came self-reliance, proof that worth isn't on paper but in miles. Function became prestige, simplicity its crown. The market may forget, but riders never will. Steel and wind remember. 2 million bikes just hit the market and prices are still sliding. Dealers are sweating, but smart riders are watching for deals. If this breakdown helped you see the bigger picture, hit like and subscribe for more real talk every day. Drop a comment below. What prices are you seeing near you? We read everyone.